good.
I could put on a more businessy shirt.
No. That's not the brand.
Okay, right.
You probably clicked on this video because you have some questions about home buying and the process in Southwest Washington. And in 2021, home buying and lending go hand in hand. So if you have any questions about that process at all whatsoever, you make sure you want to stay tuned. So today we have Hans Bruhner on, who has a website, Ask the Loan Man. So he is my loan man and who I refer all my clients to because he is so trustworthy, has so much experience, super down to earth, and just a genuine all around good person. And in an industry where there's such skepticism and there's a lot of like shady people and dealings, and people are always wondering, it's kind of like when you go to the doctor, like, am I getting the right diagnosis when you go to the doctor? It's the same thing when you're getting a loan. Am I getting the best rate? Am I getting the best product? Am I being pressured into buying more than what I want? Like, there are a lot of concerns, and we want to make sure that you're getting the right diagnosis. And I think that Hans Bruhner is the man for that job. So I wanted to welcome you onto the channel.
Thank you. Good to be here.
So we're going to go through a couple questions that most of my clients who are on here watching videos like these are either in the process of relocating. So they're either moving to or moving within Southwest Washington, and majority of them need to get some sort of funding. And I know that's where you come in, and every single person that I've referred to you absolutely adores you. And I think that everyone watching this will too. And so I want to jump in because number one, I'm Hal Byrd. You're Hans Bruhner, and we are for home buyers. So we got an HB thing going on here. And we met actually in the Vancouver Talk Facebook group that Jarrett and I started. That's my husband if you're new here. And Hans also relocated from California to Washington. So I wanted to know, because that's one of the things that made me excited about working with you. I'm like, well, number one, we're both HB. Number two, we're both into running. And number three, we both relocated here. So can you share a little bit about your experience relocating and like what you love about living here in Southwest Washington?
Yeah, absolutely. Well, I've always loved Portland, and my daughter has lived in Portland for about 7 years. So we had our eye on moving up here. And when we started looking at it realistically, we started to focus on Vancouver more because we could get more house for a better price in Vancouver than Portland. And when we started looking at the outskirts of Portland, maybe they were a little bit more affordable, but then Vancouver, for us, we were living out in the country in California, and we're living in the city in Vancouver, and we're 10, 15 minutes from Portland. So and then big piece of it that I honestly I feel bad, not feel bad, but I feel silly. I stumbled across this. I was telling a friend, I think I'm going to move to Vancouver. And he said, "Oh, are you big on the income tax, not paying any income tax for living in the state of Washington?" And I said, "Huh?" And then I was like, "Oh yeah, that's a thing. I like that. Yeah. I'm down with that." I'm excited because both California and Oregon have a pretty healthy state income tax that Washington has a big fat goose egg on, which we love.
Now that you live in the city, I remember you saying that you're really happy to be close to Trader Joe's. So that's a big plus.
My wife called me when we were in escrow, and she goes, Hans. I go, what's wrong? And she goes, we are 6 minutes from Trader Joe's. I just mapped it. And I'm like, yes, we're totally stoked, because where we moved from, Guerneville, California, in western Sonoma County, beautiful place, but we were 30 to 40 minutes from everything. And so here it just feels like in town in Vancouver, we're 15 minutes from everything. Even when we were looking at out in Philida or Salmon Creek or Ridgefield or Camas, it seemed like we were just like 15 minutes from everything. It was like anytime I wanted to look at something, it was like, oh, that's 15 minutes over here, 15 minutes over there. So it's just the convenience factor was huge for me. So I'm stoked on living in the city itself.
Yeah, and then we have so much access to biking. I know you biked over the bridge over the weekend. Jared and I went on a bike ride to downtown Vancouver. When was that? A day or two ago. So there's so much to do. So yeah, I love living here, and I'm glad you found the place too.
Yeah, me too.
And how long have you lived in Vancouver?
It's been about 6 months. So we moved here at the very end of October, Halloween 2020.
Halloween. Nice. I guess that leads to, now that you're here, you're obviously working here. Although someone did comment on one of my channels about, this is why Washingtonians don't like Californians, because they move here and make money. And I'm like, Jared said, he's like, really? Like, you got a job. Like, who's going to say, how dare you move to a new state and get a job? So can you talk about your job, career in real estate, and a little bit about your background in the mortgage industry?
Sure. I started in the mortgage industry in '92. First 3 years of my career were in real estate, but I was a property manager and a little bit of house sales. And so in '92, I decided to get into mortgage, and it really fit me well. So I've been doing this for, 28, 29 years. And that makes me feel old, but
and I won't say what I was thinking. I would probably not help the situation.
Well, it's really satisfying to, like, I'm helping a 27-year-old couple buy their first home in San Diego right now, and so I just realized I'm doing this longer than they've been on the planet. But it's really satisfying. It keeps me young. So I just love what I do. And I'm licensed in 7 states, all the Western states. During COVID, I realized that I'm really not meeting face-to-face with clients unless we're doing a Zoom meeting, and it's actually way more efficient. So I moved during COVID, and I didn't keep it a secret, but I didn't necessarily even have to tell anybody that I moved. It would have worked out fine. And if I'm helping a client in Idaho, Washington, Oregon, like, I don't always meet them face to face, but with Zoom, we get those face to face meetings. And so I made the move.
Nice. And so for people who are in the process of making the move, whether, again, moving to here from out of state, or if they're just moving within Clark County or anywhere in Washington, how early in the process should someone contact you to talk about their financing options? And, like, are there any tips that make the transition for our relocation clients smoother?
Yes. So definitely have tips to make things smoother. As far as how early in the process, I literally love to talk to people the minute that they start thinking about it. I want to know, because what happens is, people will start to think about whether or not they want to buy a house. And then let's say they talk about it for 6 months, and then they come see me after 6 months. And there's a lot of times I'll see a lot of nerves, and they're frightened. They're going, oh my God, I don't know if I'm going to qualify. And so I'd really rather have that conversation 6 months ago, so that they didn't have to carry that on their shoulders for 6 months. So that's one thing. And then the other thing is that a lot of times people come to me and they will say, like, I met a nice young man who was just had everything neat and ordered in his life. And he said, okay, I'm coming to see you. I have this much money in the bank. I've paid off all my bills. And he had spent the last 1.5 years paying off all his bills. And he didn't have that much money in the bank. And I said, well, what did you spend all your money? He says, but all my bills are gone. I said, okay, great. So I wish I had spoken to him 1.5 years earlier, because I wouldn't have said, oh yeah, just rack up debt, but I wouldn't have said to concentrate so heavy on paying off all that debt. I would prefer that he had more money in the bank, and we would actually come up with a plan. My feeling, and this thing that I say, you've heard me say this before, is if you start off on this journey and you're going to go from here to there in 1.5 years, 18-month journey, and you say, I've mapped it out, and you talk to me and I say, you know what, that's pretty good. I'm just going to steer you 1 degree off, 2 degrees off of your course. Now, if you're 2 degrees off of your original course and you walk that path for 18 months, you're going to be in a completely different place than the place that you would have ended up at by yourself. And so my feeling is that if I can help you do that, I love to do that. So I'm willing to spend my time and energy to take worry and concern off your plate, but also to help you with that plan.
And then that 2 degrees makes such a big difference, because you might have been in a good place with your original plan. Like, a lot of people can come up with good plans and they can Google and YouTube and do all the research on how to be the most qualified. But when they're working with you and you put them on that 2 degree turn, now they go from good to great, and
Yes.
they end up with better rates, or being able to qualify for more money than what they might have originally done. So 2 degrees can make a world of difference.
Well, and not only that, but sometimes when I talk to somebody and I say, hey, well, what are you waiting for? And they'll say, I'm waiting for X, Y, and Z. And I say, well, you don't have to wait for X or Y, and Z is only like a month away. So they end up buying in a month instead of 18 months, and they're blown away that could happen. So
Right.
the sooner, just when you get the idea to buy, that's when I want to talk to you, because that's what, so our goal is just to feed you the information to help, just like you're doing on this video.
Yeah. And it's a really good point that you say that, because I spoke to someone recently and they have been renters for 10 years in the same house. And they told me what their income was and their credit score. And I couldn't help but ask, I'm like, so I'm just curious, why have you never bought before? Are you, not sold on the idea of owning a home? What's the deal here? Because most people that I hear that are in your situation are homeowners. And they said, we've been working our way up in our careers, and this position in life that we're in is relatively recent. And I said, well, there's a strong possibility you can buy. And then of course, the next sentence out of my mouth was, well, you have to talk to Hans. So I can completely understand what you're saying when people are surprised at how much closer they are than they think they are.
Right.
Because there's still that big misconception out there that people have to have 20% down. And I guess, can you correct that misconception since I threw it out there?
Yeah, absolutely. I love it because right now you can get a conventional loan with 3% down. You can get an FHA loan with 3.5% down. And there are bond programs that will help you with those down payments as well. There are pros and cons to that, but you can get in with a lot less down. There's a USDA program that you and I talked about last week, yeah, where you can put 0% down, and it's I like to put it in the most blunt way possible. It's for average folks to buy average houses in rural America. So you have to qualify by income. So you have to make you can't make more than a certain amount of income depending on your family size. Mm-hmm. And it has to be rural in nature. We're not saying acreage. We don't want you to buy big acreage. It's not for a corn farmer in Iowa to buy a corn farm. It's for the worker on the corn farm in Iowa to buy a house in town. Mm-hmm. So around here in Clark County, that map I sent you, basically when you start to hit Brush Prairie and out, when you start like Ridgefield, Ridgefield is kind of the sleeper because Ridgefield is not super populated. So you could buy, but it's a very, it's crazy. So you can use a USDA no money down loan in Ridgefield. I think that's sort of the big secret. So no money down is possible.
I saw the map and I was looking, I was like, that's very interesting that Ridgefield is a qualifying area. So in theory, could someone buy a new construction home in Ridgefield with a USDA loan?
Yep.
Wow.
Yep. It's huge. We had the same thing in Windsor, California, in Sonoma County. It's this thriving community, much like Ridgefield, lots of new homes, lots of things going on. Great restaurants, all kinds of, well, I shouldn't say that. Ridgefield is like sort of, anyway, bottom line is it's this budding community. I was going to say, but it's not like lots of restaurants and lots of shopping and everything that's coming. But with all the new homes and everything, sort of like the sort of dirty little secret of the USDA, like it'll totally work there because it's not a densely populated city area like Vancouver or Camas or Portland.
Yeah, the main parts that I saw was going to be for USDA was Ridgefield, the outskirts of Camas, and Washougal. And another note on Ridgefield, because I have this conversation with clients who are thinking about relocating here all the time about Ridgefield, because they see the new construction out there. And I tell them, like, right now, what's out there is the Ross Hours grocery store, a Starbucks, a Taco Bell, and an urgent care, which is Vancouver Clinic. But I'm like, at the rate that they're building homes, there's going to be a Target in Ridgefield at some point. And the question is, do you want to buy before all the development and wait for it? Like, you're going to have to commute into probably Salmon Creek or Philida, or you'll have to go to like the North Vancouver Costco that's off of Patton Parkway and 205. But I mean, that's still, like you said, 15 minutes away.
Right.
And knowing that eventually Ridgefield is going to be, you know, just as developed probably as Vancouver is.
Right, exactly. And so the USDA will probably go away at that point. But but again, in Windsor, it's very built up. It seems like it shouldn't work, and it still does. So again, little secret there. No money down in Ridgefield. Let's go.
Okay. So I have this as question number 4. So what's a common misconception about lending or financing their home? So you talked about 20%. Is there any other misconceptions that you hear a lot?
Well, a lot of people are worried about, like the gentleman I was talking about who for 18 months had paid off all of his debt. People call me all the time and they go, I have $6,000 on credit card debt. And I go, okay, what's your minimum payment? And they say, well, I don't know. And I say, okay, well, that's what's important to me. So what's important to me is not that you have $6,000 in debt or $50,000 in debt. I mean, I'm helping a woman who has $200,000 in student loan debt, which is scary. But what we're concerned about is what's the payment. So when we're qualifying somebody, it is, what is the debt ratios? So, you know, if you make, we're just looking at, if we look at easy math, so we can do it without pencil and paper. If you made $10,000 a month and you have a $3,000 a month house payment, that's 30% of your gross monthly income. That's acceptable. If you had $1,000 a month in debt, that now you have the 3,000 house payment and the 1,000 in debt, that's 4,000 a month out of 10,000. Sorry, there's somebody at my front door. Actually, it's my wife leaving. So if you have $4,000 a month in debt, that's 40% of your gross monthly income, and that's acceptable. So we're not worried on the $1,000 a month that you owe $18,000 in debt. We don't care. What we worry about is the payment itself. So it's all about the debt ratios.
And then, so the bottom line to that is talk to you directly to figure out, don't go calculate it on your own, contact Hans, because there's always special situations. Like I remember there was a client we were working with, and I think their student loans were in forbearance, which changed what the payment was. So there's certain situations where you have tools or know-how or knowledge that the consumer's not going to have unless they talk to you.
Yeah, and student loan debt being one big deal, because if it's in forbearance, then the credit report will actually come back and show that the payment is zero. So the system has to put some sort of placeholder in there. We have to count some sort of payment because logic tells us that if you're making $0 payment against your student loan debt, you'll never pay it off. So we have to pay it off in some way. So some programs make you use 1% of the amount shown. Others will be 0.5%, so you'll qualify for more. Like the woman who has $200,000 in student loan debt, she has a deal where she doesn't have to pay back as much. And so we're having to actually get them out of forbearance and have them show what her actual payments are, because they're even lower than that 0.5%. So she qualifies for more once so it seems weird. It seems illogical. Like, whoa, my payments are zero. Great. Now let's get your payments back above zero so that you can qualify for a house. So if you don't understand what I just said, just know that if you have student loan debt, we got to talk, because you'll never understand it on your own.
And can you plug like what your website is real quick, in case people are going to hop off the video or get distracted?
Sure.
AskTheLoanMan.com, right?
www.asktheloanman.com.
Okay.
About 25 years ago, I started writing a column with that heading, and then I thought it was so cool. And I understand how cheesy that is, but it's also easy to remember. So, and I embrace the cheese.
Yeah, it's funny. Jared and I were at Safeway, I think a couple months ago, and I sent you that picture. I'm like, hey, you're at what are those things called? The dividers between the checkout stand. I'm like, I see you at the grocery store. So, and it is easy to remember without having to write it down
Right.
It's good. When people are relocating or changing jobs, what are some things that they need to consider on the job front?
So the big deal is with when they're moving, if they're moving across the country, some people are changing jobs. Some people get to keep their jobs and telecommute these days. So that might not be a thing. But if you are actually changing jobs, we need to see that you. So if somebody, we like to see that you have been in the same industry. And we can kind of stretch that. Sometimes people come to me and they go, I did this and now I'm doing this. Okay, if you're, a plumber and now you're a tree trimmer, it may feel like, oh my God, it's a totally different field. But if, you're in the trades, you're working physically, like I can link them in some way. The big deal for us is that there aren't just big fat gaps in your income. And so that's one thing. And we want to make sure if you are changing jobs or relocating and changing jobs, we want to make sure that you have the new job lined up. We know what it is. We know what it looks like. It's going to look a little bit different if it's an hourly job with fluctuating hours. We might need to see a track record on something like that. If you're going to make commissions, we might want to see how that works, because that might work a little differently depending on a new job as opposed to the old job. If you're making a salary, it's pretty simple. And so that's another example of wanting to speak to you much earlier, because there have been some people who said, hey, I can take this, this independent contractor job or this 100% commission job anytime I like. It's just sitting there waiting for me, but I also want to buy a house. So I said, well, don't quit your job, buy the house now. As soon as you get the house, we're done, we're out of your hair. Now you can go take that job. And I've had people do that. So just talk to me, because if you made the move and it doesn't fit in the box and you talk to me after, then there may not be anything. You can't put the genie back in the bottle or whatever other.
I'm the worst at remembering idioms. I'm always asking Jared, what's that phrase again? And I'm always getting them wrong. So, but genie back in the bottle works well.
Yeah.
So even if they're just kind of making loose plans, if they're, know that they're going to consider a job change, always better to talk to you upfront in advance.
Yeah, we can have I like to start with a 10-minute conversation. Just, hey, what's going on? What do you want to do? Okay, great. Here's some ideas. And then some people, I give them a couple of little things and pointers and tips and tricks. And then, great, let's check back in 6 months. It's not always about like apply, pull your credit, look at the numbers. It's, I look at it much like you in this video and educating people, is that my job is to educate you how to best take care of yourself, and give you the all the options. That's the part that I enjoy.
So are you telling me that this moment someone calls you, you're not going to pull their credit?
Oh my God, no.
So they don't have to be concerned about inquiries or that you're going to pressure them or anything like that. They can call you and have a normal conversation like we're having.
Yeah, I will try and be as human as possible. We'll see what we can. I'll work on it.
Yeah, there's some brass tacks to get down to, but.
Well, I try and be very down to earth. I try and make people smile and have a good time, but I take it deadly serious. But, I want to have fun while we do it. And I'm happy to have a conversation, human to human. And then, and then you can take that and figure out next steps.
Cool. So this is, I think, my last question for you, but as you're talking, it makes me think of other ones. So what pointers do you have in terms of making the mortgage process easier, specifically when clients have an existing home to sell, so they're a homeowner now, and they also want to buy a home here in Southwest Washington?
Okay, so it's a tricky question, not a tricky question, it's a tricky answer, because what happens is, in this hot market that we're in right now, a non-contingent offer, if it's not contingent upon selling another house, then it's going to be much more attractive to the sellers. When we bought our house here, we said, okay, we're going to buy, and we don't have to sell anything, no contingents, and that helped tremendously. So there are a couple ways to do that. A is that if you qualify with both payments, then that would work out really, really well. So if you have, and it doesn't matter if you're moving across town or across the country, if you can afford both payments, then and you have the money for the down payment not tied up in your house, then we can make that happen. That's excellent.
And so when you say afford, because I think when people hear that, they might think, well, I can't really afford to pay two mortgages, but you're meaning on paper in terms of the mortgage qualifying process, not I can comfortably just own two houses just because.
Right. I think that's a great point, Hal, because I think that nobody can afford two houses, unless your last name is Rockefeller. Nobody wants to make two payments. Oh, no problem. I'll just make two house payments. But you're right. And what I'm saying is, let's say you've had a house that that you bought for a long time ago, and the payments are $1,200 a month. And then what you want to do is you want to buy a house, and a new house, your payments are going to be $2,800 a month. Go back to that. If you make $10,000 a month, like in my previous example, that's $1,200 plus $2,800. That's $4,000 a month. 40% of your gross monthly income can go towards your housing payments. And so you really don't want to go over 45% total debt ratio. So you got to watch your other debts at that point. So that's one way. If you qualify with both, even if you plan to sell it right away, then that affords you the most flexibility, period. The next most flexible way to do it is if you have the money for the down payment that's not tied up in your current house, and you plan on renting your house, then we can show the house as a rental. And again, if let's just say your house payment is $1,500 a month on your house currently, and you want to go buy another house, whatever the payment is going to be on that one. People say, well, you can't qualify me with a $1,500 a month payment. And I say, no, I can't. But if you were going to rent that house for, let's say, $1,500 a month, it's even, right? It's even, Steven. I gotta get my calculator out for a second here. So what we do is we count 75% of that $1,500, which would be $1,125. And so we count 25% of that rental income would go towards vacancies, utilities, costs. So we just take that off the top. So that $1,125 a month gets put against your $1,500 a month house payment. And we look at that like it's a $375, the leftover $375 as a bill. So now you don't have to qualify with a $1,500 a month payment. You can qualify with a $375 leftover payment. So that's like a car payment. That's a lot easier to qualify for with an extra car than an extra house, if that makes sense. And so that's the second easiest way. And then
if someone goes with that option, do they have to have the tenants in the house, or can they still be living in the house while they're going through the mortgage process? Or does the house already have to be rented and showing rental income?
Excellent question. So the deal is that because they're going to be moving into the next house, and they're currently living in this house, we can't expect them to have a tenant already. So it's kind of double-edged. We do expect them to have a tenant on the hook, but they need to have an executed lease, and they need to have received a deposit. But let's just say that that somebody was moving into a house on June 1st. They're going to close their escrow on June 1st on a house you sold them. So let's say that they executed a lease on their current house that starts on June 15th. That's fine. Or even July 1st. It gives them time to move out. So we do make them jump through some very specific hoops, but we don't have to. So they have to have a tenant in agreement, but they can be moving in the future.
Okay, I think that makes it a lot easier. Is there another way that's possible on this in this hypothetical but very real situation of people who have a house to sell wherever their current house is, and now they're going to buy again?
Well, the other way to do it, so if they have, a lot of people will have all of their money for the down payment on the house tied up in their current house. And so unless they, pull money out on maybe an equity line of credit and still qualify for the next house, then they're just going to have to sell it, and then they're going to have to they're either going to have to sell it and have their contingency plan, like, okay, I'm going to rent back my own house while I find another house, or maybe they can make an offer that's contingent upon the sale of that house, which it's harder to get that accepted in today's market. But you never know, it can happen. So that's what would have to happen there. People talk about bridge financing. They say, hey, what about bridge financing? Meaning, a bridge from here to there. And it's really tough, because I was saying that in the first example, the easiest way is if you have the down payment and you can qualify with 2 house payments. Well, now a bridge loan is another loan. So you would literally have to qualify and be another loan for the down payment. So you'd literally have to qualify for your current house, your bridge financing, and now the new house. So you'd have to qualify for 3 loans. They're not very common, and they're hard to do, and they're hard to qualify for. A lot of people have heard about it and they go, perfect situation. And I said, okay, great. You want to make 2 house payments plus a loan payment? Yeah. Well, not many people want to do that, or can afford, or can qualify to do so.
The other option that I see a lot of people, or the other route choosing, is kind of in that vein that you're talking about, where the third option, where they sell their house, and then if they can't rent back their existing house, or they need to be here because they're starting a job, they'll end up getting some sort of short-term rental, either like a monthly Airbnb, or like a 3-month lease or a 6-month lease, which also isn't a bad idea in this market, because then they can make non-contingent offers, and they have the flexibility that if their first offer doesn't go through, because in this market, and I guess we're going into summer 2021, things are super competitive. Every offer you put in isn't going to get accepted when you have, anywhere from 2 to 5 to 10 people bidding on the same house. You're going to have, in the example of 5 offers, you're going to have 4 people that didn't win a house.
Right. And didn't you and Jared say that you'll just take on boarders? People can sell their house wherever and just move in with you guys. It's no problem.
Oh yeah. Yeah. instead of a tent city outside, you can just set up a tent city here. So yeah, is there anything that people, like anything else people should know about you, or anything you wanted to add to what we've talked about?
No, the only thing that I would say is that like I said, I really enjoy talking to people as early in the process as possible. I like to just give it to them straight. If it's not going to work, I will, I'm not going to be, I like to be blunt, but, nice about it and say, hey, this won't work now. But here's when it will work or how it will work, etc. But it's just, I love to just help people figure out their plan. Even if that plan is, oh my gosh, it won't work for us to buy a house now. At least that frees up their mind to go do something, the other thing that they're going to do.
Right.
So, yeah.
So have you seen any changes in the last year since we've been living in this COVID world? And anything you think is going to stick around or that people should be mindful of when it comes to COVID and mortgages?
No, it's exactly the same. No changes. Everything is status quo.
Oh, that's a rarity, isn't it?
No, I'm kidding. Totally kidding. Not true at all. COVID's changed everything for everybody everywhere. And lending is not come away unscathed.
Well, you made me feel really gullible. So,
so the deal is, yeah, it's very interesting, especially on self-employed people. We have a couple more hoops to jump through because, I had, there's this one woman who owned a nail salon, and she had to shut down. So her income was zero. So she was pre-approved and then not. It's just gone. Her income stopped. So she's not approved anymore. So the nice part is we're not just as an industry, we're not going to look back at the months of COVID and say, well, you did terrible. We'd say, well, you were closed down, so obviously you did terrible compared to the year before. But we needed to make sure. So she was on a roller coaster because she got in, then it opened up and she opened up and then it slammed shut again. And so, but when the window opened, she bought a house. And we did have to prove that she was actually working. That's a new step. We never had to prove you were actually working. So we now have to, the biggest thing that my staff hates is that we have to verify employment right up to the very end. At the very end, we have to know, has COVID affected employment? Are they still working? We just have very specific questions. We have to get a verbal verification of employment at the very end to make sure they're still working and not out of a job for COVID. But we also have been very human about it in that, if people lost their job for 3 months, normally we'd go, well, what's up with that? And we want to see them back on the job for a long time. We sort of lost faith in them for a while because they were out of work for a period of time. But we now, because of COVID, we know why they did it, or we know why it happened to them. And then as long as they're back on the job, we take it at face value. So it's been a journey, and it's been rough, but some of the, what I call COVID efficiencies are that there are many more people working from home. They, like me, it helped me to move 2 states away and continue doing business in all the 7 states I'm licensed. And many people are able to do that. And I mean, there are some tech companies that just got rid of office space. They said, we don't need it anymore. And others super flex. So there's some good stuff that's coming from it for sure, but it has made it a little bit more difficult. Okay.
And then, so where can people contact you? I know we said asktheloanman.com. How else do you like people getting in touch with you, or how do you like people to work with you?
So asktheloanman.com is great. I work for Finance of America Mortgage. So it's my email address is easier to get me at asktheloanman.com because my email address is this long, ugly thing. My direct office line is 360-836-5667. And my cell phone is still a California number, 707-529-9951. Yeah, call, email, text.
Okay.
Carrier pigeon.
It's just fitting with the birds if you think about it.
That's what got me thinking.
Maybe we should train them. That'd be a cool thing. Cool. So yeah, I'm glad that we got the chance to chat, to answer people's questions that they're probably asking all the time. So now I can send them to this video and they get to know you a little bit about how we work together behind the scenes. And yeah, I think it was really great.
Thanks, Hal. I love it.
Cool. Well, we will catch you next time. Ciao.
All right. Ciao. I had, I think her name was Holly Browning, this woman. She's a pianist, and my friend was just so into her. He's like, you gotta go see this woman. And so we went and saw her. And the funny part was that this tattoo, which I didn't mean it to look like my initials, but this tattoo that kind of looks like an HB, it's my, it's the Viking alphabet. And those are two sort of like letters from the Viking alphabet that mean breakthrough and growth. So, but it looks like
it's not supposed to say HB, your tattoo?
No. And
that's crazy.
Well, when I saw it, I was like, but it kind of looks like HB and that's awesome. And then after I got it, I'm like, it's kind of less than awesome. But anyway, I met this woman, Holly Browning, and the tattoo is like brand new. And we're standing there and and I'm talking to her and she kept like glancing down at it. And I go, oh, you noticed my tattoo? I go, I'm a huge fan of yours.
Did she buy it?
She like gulped, like, and I'm like, no, I'm kidding you. So anyway,
I guess on one hand it could be like really flattering, or it could be like, is he a stalker?
Yeah, super creepy
to have a tattoo.
Yeah.